Hello everyone. Thanks for joining for our another live podcast. This one is very special. We have Jasha Smith coming all the way from Hawaii Island, Maui, and a lot of things to learn about, a lot of things to talk about. It'll be interactive live session. Just give a brief description of Jasha. She started uh, from 9 to 5 corporate job, working as a civil engineer, and we will talk about where this bug came in her mind of doing real estate investor as a full time. She quit her job, moved into investment, did flipping. Right now, as of now, she's holding 9 properties. It's all cash flowing, passive income. Plus, she's also investing in multifamily, like it's like a full time job for her. So, and on the other side, family, she's married, like already have 2 kids. So, a lot of things to manage as a lady, as like work life balance. I'll give her an opportunity to introduce to the viewers. Jasha, welcome to our live podcast.
Aloha, everybody. Thank you for having me on and reaching out. I love to just share my story and inspire other people, especially those who are in positions who don't think it's possible or, have family and work and are just in the grind looking for something else to get into for financial freedom.
Welcome, Jasha. And how's the weather in Maui today?
It's nice. It's actually really sunny and hot. It's humid over here, so a little sweaty, but
Mm,
I'd rather it be that than really cold or rainy.
okay, I can still have the fragrance of the flower you're putting here. I like that.
It's
That's
fresh
so
out right from outside. Everybody thinks
yeah.
it's fake. Oh, it's
Oh,
real.
that's good. Yeah, that's real. Yeah. Okay, that's good. So that's so okay. So Jasha, like what the basic question I always have in my mind is everybody is looking for stability. We need 9 to 5 job, like somebody's paying for that regular monthly income coming in. So how come you started your journey as a real estate investor? You quit that job, you moved into a full-time investor. What is happening behind the scene? Can you please talk about that?
Well, my job as an engineer, I was a civil engineer for 10
Mhm.
years before I really started getting into real estate. I had a stable job. I have my kids, my husband, we had our home, but I was working 60 to 70-hour weeks. I wasn't really home, and it was brought to my attention, especially from my husband. He didn't mind, carrying on a lot of the responsibilities because he was an entrepreneur himself. He owns his own plumbing construction company. And so he has, 7 employees, a warehouse, 2 offices, and I was had my engineering job. And so he noticed that, he had a lot more flexibility. I always had to request for time off, even just to be there for my kids' first day of school. I missed a lot of their
Mhm.
events because I couldn't get off work or we had major deadlines. And for me, I have a really strong work ethic to where if I put my mind to something, I'm going to do it, regardless of what's going on around me. However, my family was the one who really felt that. I didn't notice it until, you kind of get in the zone. And when he had brought it up, he's like, you got to either work less or find something
Mhm.
else to do because you are tired all the time and we're getting the rest of you, not the best of you. And for me,
Yes.
I hold myself, as uh, something that means a lot is my family. So if my family are the ones suffering, then I definitely have to change paths or change what I'm doing so that I get to spend the most time with them. And, that's what this financial freedom journey and wealth building is all about, is having the time, buying back your time and spending it with who you want, where you want, whenever you want. So that's kind of what led me
Mhm.
from engineering into now full-time investing. And I seen the importance and the benefits of real estate after selling my first home. I bought a duplex with my mom at the time. That was my first home. I didn't realize that, you could sell a home and not have to pay taxes because
Okay.
the appreciation here is
Prime.
crazy. So
Mhm.
if you live in a home, you can sell it. If you're married, up to 500,000 dollars in taxes. Your profit you don't have to pay tax
Yes.
on, or 250 if you're single. So it was me and my mom. And so we made, I think it was 300,000, so 150 each. We didn't have to pay tax on any of it.
Oh, wow.
And that
Mm-hmm.
kind of opened my eyes to be like, hey, what is going on with this real estate thing, to where I thought everybody has to pay taxes. And so I think it's that worker bee kind of mindset that I had before. But once I started getting into, buying and selling real estate, I realized that there was so much more advantages to the equity in the properties. So
Mm-hmm.
that's kind of what led me to where I am today.
Yeah, so I can completely relate to that. So it's like financial freedom, time freedom, and you're working on your business. So those are the always the plus available. And obviously, real estate, if you're taking this as an investment, it's like long term. Always you're doing value add to the properties. You're learning from that experiences. So just a question, right? Let's say I'm new to real estate industry. I hear your story. You had civil engineer background. Your family was supportive. So, what to do in case somebody would just want to start with that? Like the first time person would just want to start the journey right now, and moreover, like a lady like you who is supporting the family, how to have that work-life balance? Like I am happy doing 9 to 5 job. I can attend to my kids. How is that possible for a woman? Like, what things you uh, thought about it if somebody is new to this?
So I would say, especially in the beginning of my journey,
Hmm.
it was a lot of sacrifice. So I would,
Yes.
you know, wake up at 4:30, get
Hmm.
up, do my affirmations, get some exercise in, just get my mind right for the day, plan out, okay, what am I going to do? Okay, I have to get ready, drop the kids to school or to daycare, then go to work, after work, attend to my kids, shower,
Hmm.
eat, and then boom, once 9 or 9:30 came and the kids were sleeping, then I would
Okay.
spend, 4 or 5 hours educating myself on what real estate investing was, the different
Mm.
strategies, how to raise money, where to start, what worked for me, because everybody's in different financial situations. So it's hard
Yes.
to say or give somebody advice on what to do without being in their shoes, knowing their risk tolerance, knowing how much debt do they have, what's important to them, like what are they looking for in the long run. Are you looking to flip to make active income? Are you looking to buy rentals for long-term wealth? You got to think within yourself, okay, what is my goal and what do I want my life to look like maybe in the next 5 years? Start with the long term in mind and then work backwards to figure out what goals you need to pursue in the short term, and then from there decide your steps. So for me, I knew I wanted to quit my job. So I
Yes.
thought, okay, how much money am I making a month? Okay, my job is paying me about $6,000 a month. I need
Hmm.
to I need to replace that with real estate investing, whether that's through flipping or rentals. However, once
Yes.
I got more into it and researched, it was like, okay, I'd rather have passive income through rentals, because then I don't have to necessarily work for my money. Even if you have a property manager, yes, it does take a little bit of your
Yes.
time to
Got.
manage the property manager. So I self manage my properties, but
Hmm.
regardless of the fact, it will take a little bit of time. But if you think it took me, 40 hours a week or sometimes 60 hours a week to make that same amount where I only have to give a couple hours a week to now, it's totally worth it. So I think
Hmm.
anybody just starting out, figure out what you need to do, what's your long-term goals, and then break that down into daily action items that you have
Task.
to do. And if you have to lose a little bit of sleep in the beginning, don't worry, keep making that sacrifice, and later on you'll have the freedom like I have now. Now I'm not
Okay.
doing that same schedule. I can choose whatever I want to do at any time. I can be on this podcast and this live with you. I can
Yes.
go and look for homes. I can spend time with my kids right now. In the middle of the day, I can go to the beach, and I live on Maui in Hawaii. So that is an option. But you just have
Hmm.
so many more choices in your life when you don't have to trade your time for money.
Definitely, it's so motivating. I just want to add on that you as you discuss about you were educating yourself after 9:30, you were learning about that. So learning some things is really important when you're entering any new journey, even you're civil engineer or you're working on any Starbucks, Tim Hortons, anything you need to learn about it and then you jump into it. if you have to go a long way. That's really motivating. You jumped into that. So what was the educating factors? How, like, were you reading any books, any podcast that helped you in scale and learn about the nitty-gritties of real estate?
Definitely Bigger Pockets was a
Yes.
huge resource for me in the beginning, listening to
Hmm.
the podcast, going on the website and just reading the different articles and then getting, all the books, How to Invest with No to Low Money Down by Brandon Turner, who actually lives
Okay.
here now and comes to our
Yeah.
meetups and is really an awesome guy. And a funny story I'm going to break to right now, because I love to share this story, is that
Yes.
um, I had bought a fixer upper in Kihei in the town that he lived in. And
Okay.
he had reached out to me and he said, "Hey, did you just buy this house, in Kihei?" And I said, "Yes, why?" And
Hmm.
he was like, "That's right next door to my wife's best friend's house." And I had been looking at it. I've been wanting to door knock, but he's like, "I literally pass by that house 2 times a week to go to
Hmm.
the wife's best friend's house. And
Okay. Okay.
there's broken down cars all in the front, overgrown grass.
Mm-hmm.
Like there's all the tall tale signs of a distressed home, water leaking, just everything. And it was just funny that I ended up buying that house. And he knew because what I do whenever I buy projects or renovations
Hmm.
is I go around the neighborhood and I let each neighbor know, "Hey, I just bought this house. We are going to be mindful of the construction noise and where people park. And if ever, there's some interruption, then please feel free to
Hmm.
give me a call." And also that lets them, look after the house too and know who's the new owner of the house. And so she had
Yes.
called Brandon and said, "Hey, do you know Zasha Smith?" And he's like, "Yeah." But
Okay.
and he mentioned it in a webinar. He's like, "I teach this in my book." So, it's
Mm,
sometimes it's just taking it back to the basics to
yeah.
people ask me all the time, "How do you get deals? And you live on a small island and a small community." And I say, "Well, most of them are referrals, but honestly, I
Hmm.
still door knock. I still drive for dollars, contact people. I just like to keep things simple, and I found
Simple.
success in doing that."
Yeah, it's all about taking action. I really like that tip you're mentioning. When you're moving into property as investor, you educate the people around you that you are the new owner. Anything happens, contact me. And moreover, I feel it's creating your credibility in the market that you're doing some stuff like you are an investor, you are looking into those properties. So they might in the future, they might refer you more deals. So that's a good thought about it. Yeah. So Josh, I have like questions for you, which is in the live chat. So again, the same question. I think we talked about what books would you recommend to new person in real estate industry. So it's a question like somebody who's just starting. Any recommendations on books or any podcast you want to refer? We talked about bigger pockets already.
Well, I think the biggest one that was a mindset shift for me is a tall tale book, Rich Dad Poor Dad by Robert
Oh
Kiyosaki.
yes, yeah, it's evergreen thing. Yeah.
That is like the beginner book for changing your financial mindset, about thinking
Hmm.
how to build wealth, about giving you a different point of view. And then also the book on real estate investing is called No and Low Money Down by Brandon Turner on Bigger
Okay.
Pockets. So you can go on
Mhm.
that website to find that one. That was a huge one to realize, okay, I don't need to qualify just with a conventional loan. I can use these types of private money, hard money,
Mhm.
you know,
Other
um,
people money, yes. Hmm.
right. Partner with sellers.
Hmm.
Like there's just so many different avenues where you can leverage funds for these projects that I
Hmm.
had no idea about. So I think that is just key because a lot of people get hung up on money, right? Like, how am I going to fund these deals? How are people buying all these
Hmm.
properties? They must have all this money. And it's a complete opposite. A lot of the deals that I use, I don't use any of my own money. And I could
Wow.
possibly buy some of them with my money, but I'd rather
Hmm.
leverage these other people's money and be able to use my money to buy more projects. So it just depends too. You've got to really think about what your goal is. If your goal is more cash flow, then maybe you don't want to leverage so much. But if your goal is to scale and buy as many properties kind
Yes.
of as you can within a certain parameter to make sure you're not over leveraged, then definitely utilizing all these other resources. And of course, you're going to have to pay interest. It's going to cost you a little bit more. But hey, if you can go into, get your goal of, 10 homes that cash flow $200 each and you're set, or you could just have one home and have it paid off and still make that same amount. It just depends on what strategy you want to use and how much you want to leverage yourself as well.
Yeah, so that's beautiful, Jasha, right? I always believe it's hard to find people like Brandon, like you. It's better to read from the books, learn from their experiences, and implement it. Just to add one book, it's more of a Canadian. It's like Money People Deal. It's all about doing deals about money. So that's another book to add on. So let's move on. So I have another question, right? So what is the rate of return on investment in Hawaii? Oh, very particular question about your market actually. So maybe we can talk about Hawaii, Maui, right? And what is a fast-growing market such as Seattle? So what is the difference between that? Like somebody who's looking to invest in Maui or Hawaii in particular, what is ROI you are looking into?
Well, I always look to get an infinite ROI.
And
That is
using other
always
people's
the goal.
money. That's so
But
true.
yeah, I use the BRRRR strategy a lot of the times, and how I'm making it work in an expensive market, especially if you're in one that appreciates so much. Like I think one of my homes I bought and had it refinanced in August, and it appraised at 700, and then in January or February I had it reappraised again because I was going to open a HELOC on it, and it appraised
Mhm.
for 1,050,000. So it was
Okay.
just in that short amount of time, how much equity I built and how much access I had to that equity that I could pull out. So that's
Hmm.
just one thing to consider. I mean, there's cash flow and all this kind of stuff too. And
Yes.
what I like to do is I like to buy multifamily or find a way to turn a single family into a multifamily. Say it's a two-story home. You can,
Okay.
and
You're.
bottom is the same size as the top, but there maybe there's
Mhm.
a garage and a bathroom and an extra room, an extra living space. Turn that whole thing into, another 3 bedroom. Then you'll have 2 3 bedrooms you could rent out as a duplex, and then make sure there's parking and things like that. And I also get creative by partnering with sellers. So it's called a novation. And what I do is when a seller is willing to hold the mortgage in place, I'll bring the
Mhm.
renovation funds, and then we'll
Okay.
sell the home. They will still be on the title as the owner, and I will come in with the renovation funds, put a lien on the property, and get paid
Okay.
out in the end when they list it on the MLS and sell to a totally different buyer. So I won't have to worry about that big purchase price. All I have to worry about
That's a
is,
nice strategy. Yeah, that's a nice strategy actually.
and
Yeah,
people are
that's
open to that because my latest one that I did, I was able to offer, if it was a cash deal, I could offer 350. But if we partnered, I could offer 400. So
hmm
they're like, okay, I can make a little bit more money, and then I save money on all the money costs, especially when you're
Okay.
using hard money lenders. It's an institution, kind of like a bank, but they lend on distressed properties and can close
Okay.
quicker. And for
hmm
those types of loans, you have all kind of fees. So even when you get the loan, you pay a certain amount of points. Typically, the interest rates are between 10 to 12%. And then on
Yes.
top of that, you pay draw fees, you pay a fee for the initial inspection and for the appraisal and all these other things
Yes.
that add up on top of it. So if I can work directly with the homeowner and save all
Okay.
that kind of headache, then it's a win-win for both of us. And I also do seller financing. So I have another property here in Wailuku where the
Okay.
owner, the house is passed on for generations. So seller financing can happen if they own the property outright. So if they own the property outright, they can essentially become the bank. I will purchase the property from them, but then I won't
Okay.
have to give them the cash. They basically put a loan on the property for that amount that I purchased it for, and then I make monthly payments to them. And why a seller would
Yes.
do this would be
hmm
because they either don't want to pay capital gains on a huge lump sum of cash, or
hmm
there's
hmm
some kind of um, other situation that they're in. Say like for instance, this man, he was older and his wife was in a
Okay.
care home. So if he got this huge amount of cash, instead of paying $2,400 a month for the care home, they would have to pay $10,000 a month for the care home. So there's
hmm
different situations and
Yes.
scenarios where people always question, like, why would they do that and not just walk away with all this cash? It's like people,
Mm.
there's different scenarios that you can work through. And often I find myself as a solution seeker. Hey, what's the best solution for you. If you can refinance your house or, work with a family member, I'm all about
Mm-hmm.
helping the
Yes.
homeowner in that kind of situations. And especially in smaller, like an island. I live on an island or surrounded
Yes.
by
Yeah.
an ocean. So your reputation means everything and how you do
Mm-hmm.
business. And I always make sure everything's above the water. And I think one of these last novations that I sold, so when I partnered with the seller, we had agreed that I was going to purchase a property at 400,000 and my
Mm-hmm.
ARV was 800. I was going to bring in 200 for the renovations and we both kind of walk away with 100. However,
Mm-hmm.
the market just skyrocketed. We ended up listing it for 950, sold at 975, and I walked away with over 200,000. They still made
Yeah.
100.
Wow.
And I
Mm-hmm.
was very upfront with them when we were getting ready to list the property, like, hey, we're going to list it way higher than we thought. The market just took off, but this is the risk that we take, right? If the market went down, you'd still walk away with your 100 and I walk away with less. So, I just want you guys to know that that's the premise behind, and they were fine with it because I was helping them solve a solution to their problem, which they were falling
Problem.
behind on their bills. They had these liens coming against them. They couldn't afford their car payment. So they wanted to walk away with something, $100,000 versus nothing if the bank took it away. So I think if you look at situations from an overall perspective on how you can help people, that'll always pay off.
Definitely. Just to add here, like basically, it's all about your network is your net worth, and word of mouth is really important here. It's not about transaction, it's about what network you're building, which will help you in the long run. So it's all about relationship that you are making. And plus the way you explain the deal you did, that's amazing. Attack again, tap into the sellers, use them as a bank itself, add value and move out of the property and divide your profit. That's always profitable. Okay, let's move on. So we have so many questions to answer, right? So
I
yeah,
jumped into
so
creative finance maybe too early.
yeah, so that's like how much is the commission there on buying side and the selling side? So basically, someone is looking for basically it's about somebody who's like working as a real estate agent. So do you have any real estate agent to work with, or like you? I know you go for direct deals. What's the typical price cost involved for the commission of both selling and buying side in the Moai area?
So typically it's 2.5% for each
Okay,
in the selling.
a
I'm not
side.
a
Okay,
licensed realtor, but that's what I've offered. I was pushing. So when I first started in 2019, more realtors
okay.
were open to doing, like 4%. But
Mhm.
now it's still a competitive market as far as what you want them to do. So there's some agents that will list at 1%, and all they'll do is throw your listing on the market.
Yes.
So it
Mhm.
just depends on what you want. You still want to stage it and make it look nice to get the best price. You still want them to
Definitely.
market it. You still want them to do brokers open. So it all depends on what you want the agent to provide to what compensation they'll get for their commission.
Yeah, so definitely it's negotiable, right? But there's a marketing involved, like it's a good photography, videography, social media coverage. Obviously, you talked about staging and presentation, signing, firing, so many factors involved. Yeah, that's a good way, right? So let's move on, right? How will I determine the rent to charge for my property? So basically, what is the typical price point we are looking into? Like you purchase that property, the example you were giving for, you sold for 975. What is the typical rent for those properties, and how to like define what will be the rent for that? Definitely, you added a value. It was not livable property initially, right?
Yes. So there was, the roof was leaking, there was trash all over the place. They didn't really upkeep it. It was kind of like a hoarder situation as well.
Yes.
But it's some people just can't let go of things, right? So it's difficult. And it's also like a little therapy session as well when you insert yourself into somebody else's home and you walk through it, it's a very personal experience, especially when they're going through a rough time. So that's what I
Mhm.
want to also, let people know is that it's an emotional thing too. Of course, there's people that don't get attached, but um, people are struggling. When we get homes at a discount, there's a reason, and that usually
Yes.
is because they're going through a hardship. So I don't take any of it lightly, and I try to do my best to do the best for them, and then also, I have
Mhm.
to, on the back end, still get paid for my services. But A typical home. So that was a 4-bedroom, 3-bath, a 2-story. It was right by a golf course. If you check out my
Okay, wow.
Instagram at Invest with Zasha, I have a bunch of pictures and before and afters of a bunch of my
Yeah,
projects.
we'll share the link, yeah, in the description. Yeah, yeah.
Some of them
Yeah,
are
please go ahead.
beautiful, though. You can see, like, Maui, Hawaii is beautiful. And to turn these homes into their full potential, it's amazing. It's amazing how you can really make them come to
Hmm.
glory. But anyway, so that house would probably rent about 3,500. So it's worth
Okay.
975. So you see how like a subject to deal, or if you were to take over somebody's mortgage, it wouldn't really make sense because of the high
Okay.
price point, doesn't meet the
Hmm.
rental value. But that's how I add, I'm making it work in an expensive market because I'm doing ADUs, so attached accessory dwelling, so doing multiple units on a property, or I know some condos here because condos is a
Hmm.
really big thing in Hawaii, to where I know
Okay.
condos where I can get, it does meet the 1% rule because the HOA is lower and it's at a lower price point, but oftentimes those areas do have HUD tenants, or that are in like C class areas. For
Okay.
Maui, it's still right across the ocean, but it's still what we consider, just depending
Yes.
on the tenants who live there.
Hmm. So yeah, it depends on the location, depends on the area, the value you are adding into that. So that's a beautiful thing, right? Let's move on, right? And then how do I find great deals and how to analyze properties? How do I raise money? I think we already answered that. Just to add, the way the strategy you are using it, how to find great deals. Obviously, there are deals everywhere, irrespective of the market. So, Jasha, your thoughts on that? How to find great deals? I know you are investing in Texas now in the multifamily. Let's talk about that. How you found that deal?
So that was driving for dollars. So a lot of my, like I said before, it's just like take it back to the basics. Everybody is
Okay.
calling these people, everybody is texting these same lists, but not
Okay.
many people are putting the extra effort to drive around
Yes.
and look for properties in distress before they even hit any sort of list. And we all
Okay.
know Google Maps isn't, real time. So you have the ability to kind of put yourself in the forefront of finding a deal first if you put in the like actual physical work
Okay.
needed. Go
Mhm.
drive for dollars, door knock, and things like that. So that's, I mean, that's a tried and true method. Other than that, referrals, like I get a lot of referrals, and that's what I reiterated in the beginning, is your reputation,
Yes.
right? You do things with the
Reputation.
right intentions and help people in need, even though you didn't buy the house, I still leave them with value. So there's people with broken down cars in the front of their house. I said, hey, there's this county program that you can look into that they'll tow 2 of your cars for free if you just call this number.
Oh,
Yeah.
nice. That's a nice value add to them. Yeah.
And I leave
Mm-hmm.
my card. I let them know if you ever need any help at all. I can help you also research some um, mortgage help, like especially with COVID, right? There was a lot of programs out there that people didn't know about that could help you pay your mortgage until you kind of get on your feet, and rental assistance and all these other things. I always look out for my tenants as well, my long-term tenants. I let them
Okay.
know, hey, there's this, I've heard about this one rental assistance program if you guys are needing help or whatever. I mean, it's a dual benefit, right? But how many landlords do that? Let their tenants know, hey,
Mm,
there's these programs out there if you guys are needing help. They're offering these services for free, or even they were offering, like, I think, food packages. And I don't know. I
wow.
just I really care about the properties. I care about the people. And I
Tenants.
think that's
Hmm.
what kind of differentiates me and why I'm successful now. And my goal at the end of the day, like my passion, is to create more affordable housing. I do have a
Definitely.
one short-term rental, but um, that more so will catapult me to be able to get into these bigger affordable housing projects that I want to do.
Hmm.
And so right now I'm in 2 syndications. One is a 110 unit in Austin, Texas, and another one is a
Oh,
263 unit in I'm saying this right, Osceola, Florida. Um, And so those projects, I'm in it as a part general partner. And that's all through
Okay.
networking and through meeting this lady, Emma Powell, who created this company that she
Okay.
negotiates having a general partnership role in the actual project itself. So I can't, that's another thing I like to reiterate. I mean, even me, buying Brandon Turner's a house Brandon Turner was looking into, or connecting with this lady, Emma Powell, and now being a part of, 200 unit apartment deals. It's like, it's crazy, but also I know that I've always tried to add value to other people before asking for something from them. Right. And so that's
Definitely.
always been
Dasha, so it's all about, yeah, give, 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 right? And automatically things will start coming back to you. I really like that. So it's all about you're finding deals by your network and you're adding value to the people. They're coming back to you. You have a good relationship. And obviously, this syndication deal you were talking about and taxes, I know Maui, right? Then taxes, then Florida, right? So you are everywhere all of a sudden. That's amazing. Yeah, that's quite motivating. So let's say somebody who want to partner up in a deal, right? So what was the best criteria to look for? Let's say you started investing in Florida. So what was so exciting about that deal? Somebody is doing investments like you, but bit hesitant to move out of their state or province. So what was so motivating about that deal? How do you did your analysis? Okay, let me partner up. What was so special about it?
Well, definitely looking for areas that are coming up. So if there's a lot of job growth, a lot of growth
Okay.
in the cities or other things coming up in there as well. So right now, I'm actually partnering in 7 deals with people across, the United States. So in
Wow.
Georgia, in Texas, in Arizona, in a few other states, but they are doing their first deals or have reached out to me and say, hey, I have
Okay.
this deal, but I can't qualify because I'm a newbie. I can't get this
Hmm.
hard money lending. Can you help me? And so I'll analyze the deal. If we're making, $40 to $50,000 each, I'll jump in because I can. My biggest, I feel like my biggest quality or how I add value to others is the capital raising. Because I live in
Okay.
such an expensive market, for me, I have to raise between $600,000 to $800,000 per project, and I'm able to do that. A lot of my projects are private money. And because we live
Okay.
in such an expensive state, there's a lot of people who make a good income here who are looking for other ways to invest to help grow their money passively. They don't want to be like me, meeting with contractors and running around doing all these projects. They want to just
Yes.
have it work for them, be, making way more than in their savings, and have somebody else do all the runaround work and, coordinating. So for me to jump in other deals in other states, I mean, it doesn't even compare because they're working on, $200,000 to $300,000 projects to where I'm $500,000 to $1 million projects here. And I
Yes.
just
Yeah.
sold my most expensive flip on Oahu and Kailua last month that sold for 1.25 million. So just to
Hmm.
give you and that was a single family home, 3 bedroom, 2 bath, maybe 1,000 square
Like it.
feet.
Oh, oh man,
So
that's
it
expensive.
definitely is
Hmm.
a high price point here. And the reason why I need to, at least if I'm doing a project by myself, I have to at least make at least 100,000. Or if I'm partnering with somebody, I have to make at least 50 because of the high price point. We got to make the most use of the money. And there's a lot more risk, right? It's a calculated risk. And we run our
Yes, obviously.
or due
Hmm.
diligence. However, like we're experiencing now, the market could shift or change, or we don't know what could happen. There'd be longer hold times. Contractors could, take longer than expected because they can't get materials because
Yes.
businesses are shutting down. So, yeah, that's kind of where I'm at.
So definitely. So basically, you are always looking for opportunities, and this opportunity came to you, and the price point was exciting. Obviously, I know as an investor, you'll be looking into adding a value, doing something out of it, and then refinancing and taking your money out, leave those units, just cash flow them, right? That's the ideal strategy, right?
Well, and I
That's good to
often
hear.
do work with people in mentorships that I'm in. So I'm in Ryan Pineda's Future Flipper
Okay.
program, and I'm also in Pace Morby's Sub 2 program. So if I know
Oh,
somebody's in those programs and has the same ties or, the same work ethic, and we build a rapport, and we got to trust each other, right? It's a huge trust
Yes,
factor for me to trust somebody
definitely.
all the way in Texas that they're going to handle this project correctly. And, I know that people that have ties to other mentors that are higher than me will most likely pull through because they don't want to, again, stain their reputation or be that person to be called out in front of, all these other people in the mentorship. So,
Definitely. So
mhm.
just a question on that. So obviously you are investing on yourself. You are getting continuous education. You are creating your network. So any suggestion for somebody who's like doing medium flips, maybe not a beginner actually, so want to scale into a multifamily? What is ideal way to penetrate into that market? Maybe follow your strategy. What- Any thoughts on that?
I feel like it just depends. For me, I have learned, I tried to do my first couple deals were on my own. And I thought,
Okay.
oh, I got this. Like, I watch Bigger Pockets, I have YouTube, I
Yes,
can
you are a
just try
champion
it
now.
out and see how it goes. I made a lot of
Uh-huh.
mistakes that were costly. I still made money in the end. I mean, my first flip, I
Okay.
made $103,000, but I
Not
was
bad.
just using logic too, right? And I was getting through it, but I was paying contractors cash. I was running to Lowe's on my lunch break, meeting them after work on the weekends, doing dump runs, which I essentially probably was costing them more time because they were probably waiting for me. But
Okay.
I was constantly jumping into things that I probably didn't need to do. And so after
Okay.
that, I knew, I was like, there's no way I can scale doing one project at a time. And it's taking up all my time. So after that, I joined a mentorship. I joined Ryan Pineda's Future Flipper, or now it was the All Star program. And that really taught me and gave me the confidence after being around these other people making it
Okay.
happen and doing $1 million deals. I was like, how are you guys not so like, I'm so stressed out all the time. They're like, we have systems and processes. You just follow
Hmm.
these stuff and really, you know, time block and create this, treat it like a business. Don't work in your business, work on your
Yes,
business.
definitely on the business. Yes,
Biggest
that's a good one.
lesson that I took away. And so now I'm more so working on the networking, thinking of the bigger aspect of the business and how I can partner with people and leverage, and we can leverage each other, right? Because I'm not trying to build like a huge flipping company or, a huge rental company. Like, I want to be able to leverage other people and not have employees and have all this stress on worrying about somebody else's salary or how they're going to feed their family. I'd rather just partner or do a deal, we make money, and then boom, we either move on to the next one or move on to the next project and have less stress because now our responsibilities are split.
Definitely. So that's a good thought. So basically, it's learn from the experienced person, implement it, or tap into the existing network, utilize that, maybe use their same contractor, use other people money, and find the deals. And just I always say, rather than eating a watermelon, why not we eat grapes? So it's like all about sharing and caring. Just implement that. That's a good thought, right? So let's move on, right? What investment strategy has worked best for you? Basically, it's ROI because you started flipping homes, you added values, now you are into multifamily. Uh, what is the best strategy that worked well for you? Any thoughts on that?
I feel like, well, it just depends on what your goals are. So I still flip. So like I said, I have
Yeah.
7 flips going on right now,
Hmm.
and I also am still buying rentals. I haven't bought in one yet this year because nothing has, fit my buy box. So I'll continue flipping. If I find a good deal and it doesn't work as a rental, I'll still use
Yes.
other strategies in order to still make it a deal. So wholesale, flip, or partner with somebody to go in a different direction. But there's always a way to make it work for yourself. So, I mean, the best ROI for me has probably been my multifamilies and having that flexibility is the ones that I own on my own. So syndications are good, but with syndications, you own a small part of the equity because it's split
Yes.
between not only the general partners of the deal, but now you have all these limited partners in the deal as well. And they're longer. So those syndications are between 2 to 5 years. So majority of them you'll get paid out like in the 5th year mark because it takes 2 years
Hmm.
to renovate and bring it
Yes.
up to scale. then a couple years to have consistent income and cash flow, and then you kind of sell those properties. So it's not a very long-term strategy. I mean, for the most part, there's some syndications that go longer than that. But yeah, so those small multifamilies that I own on my own have been definitely the best ROI.
for property. So basically, you're still having a operational business. It's like for flipping actively, and you use that money and into the long-term assets like a syndication, where it's more of a passive
Yes.
way of doing it. Yeah, it's a good thought, right? So what you should look for an investment when you do a property too? Let's say you were looking for that distressed property. So what your the key things as an investor you're looking into that? Obviously, location is one of that, but what are the external components? What are your thoughts on that?
So you're talking about the actual, where do
Actual
I look
property,
for
yeah.
these distressed properties? Yeah, so I mean,
Yes.
the type of neighborhoods you want, for me, I look for, a B minus C plus neighborhood. So somewhere that's not
Mhm.
too expensive, but not, too much crime. And then I'll also look for homes that have good bones, right? So
Okay,
there's
structure.
no,
Mhm.
yeah, there's no, like, a lot of homes here have like a lot of termite damage where you have to completely rebuild the home itself. And that costs a lot of money, and permitting here takes a very long time. I have a flip that I've been sitting on for over a year that
Oh,
is waiting for permitting because it's considered in a historic district in the middle of a residential neighborhood. But because the town is so old, that we have to go through a bunch of different hoops with SHPD and some historical district offices. So it's
yes.
just some
So
one
back
thing
and
to
forth.
be aware of is, like, make sure the area that you're buying in is a community that is already residential or already zoned for multifamily, so you don't have to jump through all these hoops to make it work. And also the square footage of the home. So, like I said, I like to look for corner lots, especially ones that are
Okay.
2-story, because then the second dwelling is already pretty much built, right? You just have to
Mhm.
build rooms in it. But as far as the structure, really, you don't really have to change the outside layout of it. You just got to create more rooms inside.
So definitely. So to add on that, it's all basically location based. Permit is always tough everywhere. It's like a red tape. I would always say a lot of fees involved, a lot of time, and as an investor, it takes a lot of your time, energy, plus the cost involved. It's like a carrying cost, I would say. And by the time the market shifts, so there is always risk, as you already mentioned. It's called calculated risk you go for, or you should have some different strategies. If the property is not selling, you might rent it out now because just to just quick question on that. How's the rental market in Maui, right? Overall, I know it's a tourist destination. A lot of people go there. Fantastic weather. So how is the rental market over there?
It's very limited. I just had a renter move out the end of July and
Okay.
literally put it on the market. I think on August 1st, I had 60 inquiries, and then 20 people actually filled out the application and passed, all the due diligence phase. And then I had about 10 of them who were real candidates. And then I ended up choosing one. So, I mean, there's no slim pickings as far as who wants to live in Maui and choosing between renters. But I will say too that even the short term market is crazy busy. I have one short term rental that's probably
Okay.
at 99% occupancy this whole entire year, from January until now. And it's summertime is even more hot. And from that one, my gross income, and it's a small studio, 300 square feet,
Okay.
with a sofa bed, is my gross income a month is $8,000.
Oh wow. Just for
So
300
that's
square
my
feet.
gross after net, after property management fees, Airbnb fees, the cleaners, taxes, HOA. I probably net around 3,400 a month.
No, not bad, right? So it's like
My
same
long-term
like getting
rental is
paid from a
only,
job.
yeah, my long-term rental is only probably net between 500 to 1,000. So that's why you can see a lot of these people go into Airbnbs. However, for me, I think long-term, right? What if COVID happens again, or there's no vacancy, could it work as a long-term rental and would it make that much? No. But I have my long-term rentals as my stable, accountable income. And then I have my, extra Airbnb. So
So, so it's like you are everywhere. You are a multifamily flipping Airbnb. So how you create the balance in the life? And I have a question, right? I know Airbnb is lucrative, but it's obviously taking your energy. So long term is more of a passive. Tenants are there, like they're just paying you. Obviously, the cash flow is less. So how you handle that? Any tips on that Airbnb or long term renting out? What is your preferred mode?
I like a little bit of both. So I like to diversify. Obviously, I have
Definitely.
Airbnbs, I have long-term rentals, I'm in syndications, I'm doing flips, I'm partnering with sellers. I like to try everything because I feel like when you find a deal, having multiple strategies and seeing which one fits the best for you at that moment. Because say I'm running low at cash, I'm like, okay, I'll just flip this one. Okay, I want to build up my cash flow. Okay, I'll keep this one as a rental if it works that way. So just
Hmm.
knowing what works best for you and being able to switch between different strategies is something that I suggest everybody look into. Whenever you get into a deal, say, okay, would it work in these types of ways? And then you'll always have an exit strategy to fall back on if the first option didn't work. Say you were going to flip it and then now you end up keeping it because it didn't sell.
Yes.
Would you be able to still cover the mortgage as a rental? So determining all these things before you even buy the deal is really, really important to help save you headache and, hopefully save you time and money.
Definitely. So that's a good way. So let's move on. We have another question. So what are the ways to get the investment property loan when your debt to income ratios are already maxed out? Just let's say you're not able to qualify on the lenders. So what is your strategy here? Obviously, we discussed about other people money, creative financing from sellers. What are your thoughts for an investor who's not able to qualify from a conventional lenders?
They have DSCR loans, which are basically loans for limited liability companies or corporations or any type of business entity, which they lend based on the asset itself. So they will lend anywhere between 60 to 70% of the
Okay.
ARV. They look at the income of the property. They look at, the renovations, and they take that into account. They don't really take, they might take into account your credit score too to qualify.
Okay.
But other than that, as far as like your income qualifications, that doesn't really matter. But a lot of them too, they count on your experience. So before you can get that type of loan, you just can't be a newbie. Majority of the time, typically, I'm saying there's probably companies that might lend to you, but typically you can't right off the gate get into this DSCR loans. You kind of have to have some experience and be able to qualify with your credit score. But I mean, hard money, private money, and like I mentioned before, creative financing, partnering with sellers,
Yes.
even, the seller financing, they didn't ask for my credit score. They just wanted a certain payment. And as long as they, recorded the mortgage against the property, which means that if I ever defaulted, they could take the property back, but they don't really care because I'm already paying $2,400 a month in interest only payments. So everything I'm paying from the time I purchased the property to if I ever miss a payment and they foreclose, it's just extra cash on top of their original purchase price.
Definitely. So there's a contra question on that. Definitely, you have to come up with a 30% from your own pocket. Yes, that's there, right? So you are doing like as of now, you are actively working on 7 flips. So how you manage those contractors? Do you have your own team, or it's all sub trades, or do you have any property management, basically a constructor, main guy, handyman? How you manage all those flips happening at as of now?
So whenever I partner with people, they are the ones handling the construction. I'm more so the capital raiser. I'm the one who qualifies for the loans or has the
Hmm.
gap funding to help pull the deal together. And so a lot of
Okay.
times it's not like a straightforward, I manage the property. I'm trying to get out of that, management part by, like I said, splitting the responsibility, having the other partner manage that side. And I kind of manage the money aspect, escrow, all the paperwork. And then they manage everything, boots on the ground, project management, contractors, and things like that.
So when you say the other people, is it like the sellers you're saying, or is it somebody, your partner on the deal?
Partner.
Who's
So
that?
say there's a new investor who found a really great deal, like super great, 50%
Yes.
ARV, and they don't know how to raise the funds, but they know it's a good
Okay.
deal. They bring it to me. I know it's a good deal. We have a lot of
Mm-hmm.
wiggle room as far as whenever you get into your first deal, there are going to be some mistakes that are going to be made. And so I have to
Definitely.
make sure I vet the deal. I talk to people that I know, other investors in that market, pre-qualify. Okay, are these numbers good? Is this how much the average is for construction in that area? Talk to realtors in that area, make sure that, the ARVs are correct and the comps. So there's a lot of due diligence that goes into my part. And when I feel comfortable, then we come together and figure out, okay, whose role is where. And a lot of times, because I'm in Maui, they're probably in that same state where the deal is. They're the ones that
Okay.
are going to be on the site daily or manage the weekly progress.
Okay, so that's good, right? So basically, it's a way of scalability for you. It's a multifamily, seven properties, like a seven multifamily projects on the go. So that's a good way to scale. So there's a question like somebody who's in States, or maybe they might be in Canada, so they want to start investing. So as per your experience, I know you are in different states there. So what are your tips? Which is the best state to start with the initial investment, and then learn from then, and then you expand? What are your thoughts on this?
I think it's great if you can find a way to. So, okay, let's step back. If you
Yes.
have, if you have no experience and really want to get into real estate investing, I would highly
Yes,
suggest going to a real estate meetup in your area. A lot of times they're
definitely.
free, and you'll be surrounded by other people who are already doing it. Then, when you get
Mhm.
there, find out how you can add value to this experienced investor, because being able to walk from A to Z through an entire project is priceless. Figure out, hey, do they need help? Do they need help walking projects, or do they need
Yes,
help with bookkeeping, or an assistant to kind of follow them around and take notes? Or how can you add value? If they need a deal, you start driving for dollars, you bring them a deal. Even if you give it to them for free, if they can walk you through the entire process, that's priceless.
process. Mhm.
And then you get all
Mhm.
their connections. They will have trust in you, and they might want to partner with you, on the next project. So there's so much value that comes with, if you want to invest in the market that you live in, finding somebody
Yes.
else that's already doing it there and just emulating what they're doing is probably the best strategy you can do.
Definitely. So going to those meetups, creating that network, and adding value to other people. That's a very well said, right? But somebody, let's say, in Maui, right? So it's like they should continue investing it there, or they should more explore more options where there is growing population, may jobs coming in, more perspective. What are your thoughts on that? So that's you are given a choice to move out of Maui, right? Are you comfortable staying there, or you want to scale somewhere else?
It all depends on your goals. Like I said in the beginning, if
Yes.
your goal is to build your net worth, right here, baby. Like I said, in a few
Just in the
months,
backyard.
my net worth went up $300,000 by just holding
Hmm.
one property. But that
Yes.
doesn't always work for cash flow, right? A lot of times you will be in an appreciating market, but it doesn't cash flow as much. So if I were to move to
Yes.
other markets where I could make, more cash flow, because that was my goal, then for that would work for me. So it all
Hmm.
depends. And if you want to get in at a lower price point, or you want to be doing deals all the time, there's much more deals in other states than there is here. I'm doing these 7 deals, only one is here. So the 6 other ones are in the States. So you can do more outside of an expensive market. So it all depends on if you want to get into these lower price points, maybe make little profits here and there that add up to a
Hmm.
big profit, or here you kind of
Hmm.
wait for almost like the big fish, right? And then boom, you get this huge profit at one time. So it's, for me, it's quantity, or it's quality over quantity. I don't want to be having to do, like,
Yes, so
20
many
flips
deals.
just to get $100,000. I want to do one or two and get $100,000. So It all depends on
Yeah,
your
makes
goals.
sense.
And then even for the rental cash flows, right? So there's all these cheap markets that you can buy homes for $50,000 that'll cash flow 200, or I could be here and buy a condo for 300,000 and then cash flow maybe $500 to $600 a month. So it all depends. It's a
Yeah,
higher
so
price point to get in, but
mhm.
there's pros and cons to both of them.
Yeah, so it's all about your life priorities. You need to create a balance out of, in the end, it's why we started real estate investment as we talked initially, right? It's all about your financial and time freedom to give time to your family, to yourself, and to your overall growth. I know I really appreciate that. I think we're just coming to the end. It's last couple of minutes we have. So you have been working with Ryan Panetta, right? You were mentioning, right?
Yeah.
So my son's name is Ryan, right? So that's why I was saying that. So it's good to have. And you were mentioning about there's another group that you have joined in, like
Pace Morby sub
Postmark.
two. So
Okay,
he strictly focuses on creative financing. So that's what I
okay,
mentioned. Subject to lease options, novations, seller financing, and kind of negotiating with partnering with sellers. So he kind
definitely.
of opened my eyes to that realm. Ryan does that as well, but not on a scale. He mostly focuses on flipping and
Tips.
wholesaling and cash deals because you can always get the best price if you offer all cash, right? And then you get creative when there's difficult situations to try to still make a deal work, basically. But
Definitely. And that's like a eye-opening and learning experience for you and for so many people. That's good to know. Any last thoughts before we wrap up? Anything about Moai or whatever your life, how is happening so far? Like anything you want to add to our viewers?
I definitely believe that you can choose to have an impact on your community while building
Yes,
wealth. And so, how I do that is I rent to people on assistance like Section 8, Catholic Charities. And
very good.
I also don't always sell my flips to the highest offer. I oftentimes
Yes,
choose to work with first time home buyers or accept a little bit less if I feel like this family is going to really, appreciate the home because each home that I do, a lot of work goes, even if I'm just managing the money side of it, it's time and effort on my part to put it together and to see these homes and the impact you can make on the community, the value you can add to
definitely.
the community of this empty home, if it was vacant or distressed or a drug house, and turn it into a home for a new family raising their kids. Like it's just that's what fills my cup. That's why I love to continue to help, especially new people, to see this impact that you can make. So I think that's one thing that I want to leave you guys with is that I definitely know that there is a perception of investors that we're just in it for the money. And of course, that's a byproduct of what we do, but you can also make an impact
See
while
the
building.
value and the impact. Definitely. So it's, I always say the glass overflows when it is already full. So when somebody is like adding value, somebody's who already satisfied their daily needs are fulfilled already, then only you think about the community, other people adding value. And this is what you are all about, using your investment strategy and adding so many things, wonderful things, to the beautiful island, right? Thanks, Jasha, for coming to our event. I think we're running short of time already. So many questions to answer, but it's a beautiful journey. And really, I know last thing, whenever I come there, right, with my wife, I'll have that gift from you, that lovely flower you are having on the hairs. And thank you again. Thanks, Jasha.
Yeah, thank you.
Yeah, take care. Bye.